What's going on, guys? Brian's here. Today is Friday, September 1st, 2023. The market is not yet open, and I decided to do this video, which is going to be a little bit different from what I would normally do because I had a couple meetings this week. One of them involved a live webinar with a group, and we were discussing Tesla, and I figured the information in that webinar was pretty valuable for the YouTube community as well. I will be talking heavily about Quant Trading App. We'll be getting into that in a second. With most of the videos that I try to do, I try not to exclusively talk just about QTA, which is short for Quant Trading App, as I try to include anyone that's watching the videos on YouTube. However, a lot of the decisions I make whenever I'm trading is based on QTA. On top of that, this is not a trade in which I took, and I also try to limit a lot of the videos that I do on trades that I actually take, as I think that's the best way to educate or showcase what a trader was thinking. However, I'm leaving out a lot of valuable educational information if we're just focusing on the trades in which I take. I don't trade Tesla that often, especially since the stock split. It's not a stock in which I look at, and I know a lot of people do still trade it, so I decided to do this video. Now, as we're looking at this chart right here, this is the 30-minute time frame. So actually, let me just change this over to the 15-minute time frame. And we're talking about this explosive move here on Tesla for this week, as well as the entire market. So if I just zoom out and let's just take a look at these four charts here. We have the SPY, the SPX, and the QQQ, which is the NASDAQ here, the ETF for the NASDAQ. And we can see it's been a pretty explosive week for the entire market. So let's just dial back into Tesla. At the start of the week, if you're putting together a game plan, or let's just say you have some sort of reasons to take a trade, maybe it's based off of some sort of technical analysis, and then you know that Tesla had been breaking out of a trend, or whatever your reasons were for starting the week off saying you want to be trading Tesla. The next thing you're going to want to think of is how far do you think it's going to go if you're trading long, or maybe you're thinking where will you buy if it pulls into support, or maybe you're looking for some sort of a technical pattern. A good edge in which we have is gamma exposure. So if we look at the Quant Trading App Discord, we can scroll back up to the beginning of this week here, which is Monday the 28th. But to make things a little bit quicker, let's actually just head over to QTA. This is the application here. Let's just switch over to Tesla, and let's just jump to Monday's expiration, and then let's submit this, and it will actually load up the gamma exposure for the weekly expiration for Tesla at the start of the week, and then we can walk by it from 15-minute increments and see what actually happened. So this is pre-market here on Monday. So before the start of the week, if you're coming up with a game plan, here's 9:16 Eastern time here, and we can see that the absolute GEX strike is at 230 and max pain is at 230. These are two dominant levels, or this will be considered one very dominant level based on the options chain. I don't want to explain gamma exposure in this video, but you'll often see it written as GEX. And I have other videos on this YouTube channel, and there's a playlist just on the gamma exposure. So to keep this video as short as possible, just know that max pain and absolutes gamma, if these levels are lining up, then this level is going to be pretty dominant. The next thing that we notice if we just take a look at this chart is pay attention to how large this green bar is, and then also pay attention to how large this level is. This is letting us know there's a lot of positive gamma at these strike prices. This yellow-orange level here, depending on what colors you have your monitor set to, is the current spot price. So when this screenshot was generated, which was 9:16 Eastern time, Monday morning pre-market, this is where Tesla's last traded price was, and this is the snapshot of the gamma profile. Now, if we jump to the next screenshot here, this is a couple minutes after the market opened. We can see where Tesla was currently traded, and then we can see where the gamma exposure was. The absolute gamma strike jumped up to 250. Max pain is not going to change during the day, so it still remained at 230. The things to take note of here is we can see the positive gamma is increasing towards 250, so that's generally going to be a good sign if you're thinking to be long. This is letting us know potentially where Tesla can go as a very realistic target right now, as it's only 9 points away, and then this is letting us know that this is a potential strong support. So the way you're going to be thinking about this is if Tesla was to pull back into 230, maybe look to take calls and target something like 250 if you trade calls. If you like to short puts, then it's letting you know you can short puts around the 230 strike or below 230, and the assumption will be that Tesla will remain above 230 for this week. Those are two different ways to be bullish, and obviously this video is just for educational purposes as I'm demonstrating the thought process or the logic behind the approach that you may take if you're trying to trade a symbol like Tesla. Then if we were to scroll here, we can see that this is where it opened on Monday. It opened at 242.50 or just about, and then Tesla pulled in, and then it ended up getting stuck around 236 or so. As we can see, we can actually scroll and pay attention to what the gamma was looking like throughout that time. So if I just were to pull this back open here and then just click through this, we can see as Tesla is bouncing around, pay attention to the spot price 240. We can see what's going on with the gamma exposure. And as we continue right along, the blue in the background is letting us know there's a lot of calls being traded. Either way, we're seeing a lot of activity to the call side, and we're seeing these call strikes continue to increase. I like to paint the analogy of, think of it like a Wi-Fi signal that you look like on your phone. If you see the bars increasing, it means the strength is increasing towards that direction, and that's generally going to be a good indication that price may want to head in that direction. The same works in reverse. Let's just say there were a bunch of red bars and they were getting larger and larger further away from the current spot price, then the assumption would be that price will probably gravitate towards all of this negative gamma. It doesn't always work out this way, but if you're just glancing at a gamma profile and it's your first time seeing this, that's one very quick elementary way to gauge of some sort of directional bias. Again, just pay attention to these bars, and that's the oversimplification to how you can use this type of information. Now, if we continue right along, let's go back to the chart here and let's see what we have on our chart. This 230 level, as we remembered, is a very powerful gamma level on the chart, and we would have been able to identify that from pre-markets or anytime Monday morning as Tesla was trading here. If you're just taking a look at it and you want to be long, the next thing I like to do is take a look at the gamma profile just to get an idea or gauge how strong does a particular level look. I've used the analogy before that your chart is two-dimensional, so we're seeing everything in 2D, whereas when you're looking at gamma exposure, it's almost like you're looking at it in 3D because you're getting another dimension. This 230 level, yes, this Quant Trading app is letting us know that this is what's referred to as the buy zone. So it's letting us know, hey, look to potentially get long Tesla in this area here, because statistically speaking, over the past X amount of years, this has generally been a good place to get long Tesla for a week like this. So if we know this, the next thing we're going to want to look for is confluences. What are additional reasons that we may want to get long in the 230 area? Now that we know that this is a very strong gamma level and it's a strong level from the options chain, we're adding confluences to this 230 level. So it's not just a discretionary level, and we're not just buying it because we think 230 is a good level. We have multiple reasons to want to buy it. But as we can see on Monday, price never sold off and went down to the 230 level. So the next best thing is going to be, what do you want to do? Because obviously if Tesla came down to 230, there's a lot of confluences on this chart. We have demand zone from last week, we have previous support, we have the Quant Trading app levels letting us know that 230 is referred to as the buy zone or potential buy zone for this week. We have the absolute gamma letting us know that 230 is a strong level for this week. And then we have a clear target, which is 250. So the next thing that we see on this chart right here is we see 230 to 250. That's a very nice big trade right there, and there's room to hold the trade potentially for a swing trade in this case with a tight stop, maybe a stop loss below the 226 level or so. So you're risking 4 points to potentially make 10. That's a great risk reward. So it's checking all the boxes for things that we might want to look for a trade. But as I said, it didn't pull into 230. So let's take a look at the next day. What's the next best thing we can do? We can look for some sort of a technical break, which most technical traders might have. Maybe you might have a pattern on your chart, something like this, and you see some sort of a triangle and you're looking for the break. But what we can do is let's go to Tesla here, and let's actually go back to the dashboard for QTA. Let's scroll down here and let's actually pull up Tesla's chart. So if we click that, it's going to pull it up what the Quant Trading app levels look like. So this is the same chart that we're seeing within Thinkorswim. So we can actually jump back to, let's go to Tuesday here. So this is the day right after Monday, and it's going to repopulate what Tesla looked like that day. And what we can see right here, a large piece of QTA is built around the 2-day anchored VWAP. So that's what this level is in our background here, this lilac lavender color right here. The gray level is the standard VWAP that you get on any trading platform, but we can see this is our 2-day anchored VWAP, and I have videos on the 2-day anchored VWAP. If this is your first time seeing this, I would recommend you check those out, as they are a couple of my favorite videos that I've ever done, as well as the 2-day anchored VWAP is something that I've been using for years, and I still think it is one of the best, most simplest tools that you can have on on your chart. What we have is Monday's open. So Tesla opens right at the 2-day anchor VWAP. This is letting us know relative to yesterday, all of the buying and selling that occurred yesterday, this is the average price we can think of it as, because VWAP stands for the volume weighted average price. So volume weighted average price. And the 2-day anchor VWAP is just anchoring it to the previous day's open, and it's letting us know relative to yesterday, this would be that average volume weighted price. When we see some sort of pattern like this, and usually it's if it's an excessive downtrend and then price gaps up, then we want to see it gap up over the 2-day anchored VWAP. In this case here, it didn't really gap up, or it wasn't really a massive downtrend the day before, so it doesn't match that criteria. However, it is letting us know that price is above this weekly midpoint. It's above, which is just another support level. It's the previous week's close, and then we're also above the 2-day anchor VWAP, and we can see as soon as the market opens, these are 5-minute candles, Tesla pushes off of that level, and then we have the standard VWAP also rising. So this is letting us know, hey, if we wanted to buy at 230, but price is not selling off to 230, as there's a lot of strength in the market for this week, what's the next best opportunity to get long? Maybe it's a break over the previous day's high, but as you guys can see, that's you've already missed a good chunk of the move. That's about 5 points already in terms of it's already about 5 points that it's already rallied. So you might think that you've missed out on the opportunity if you're just looking to swing to 250. So the faster you are to react, obviously the better, but it doesn't always work out that well, especially if you're a trader such as myself, that I try to avoid trading the first 15 to 30 minutes if I'm taking directional trades like this, unless I have some sort of massive conviction or massive edge. If Tesla was at 230 this day, I would have jumped in very early, because again, there's enough confluences, and it would have been a plan that was premeditated from the previous day's pre-market session or over the weekend when I was doing some sort of an analysis. The next best opportunity is we have these levels again. Everything that you see on these charts again are generated from the QTA script. So if I were to hide all the studies, you guys can see this is just plain TA, and then this is letting us know these are our levels. Now if I were to actually, let's add what this is missing. I just turned on in the background, I just turned on the intraday script. So what I have on this chart, again, we have the standard VWAP, we have the weekly levels, which are these right here from QTA. And then I just turned on the intraday levels. So if I were to turn this off, you guys can see in the background, now we don't have the 2-day anchor VWAP. We don't have any additional levels. But in the meantime, I just turned that on just so we can now cover the next subject right here. So press apply. So here we go. We have our intraday levels. This right here, this purple level on our chart is letting us know what the absolute GEX strike is, which is 250. So even if we're not looking at the data or you're not researching yourself, if we were to look at the gamma profile right here, as we can see, this purple 250, that's what's lining up on our chart. That's the 250 strike right here. The same thing, this blue level 245, that is the max pain. The max pain ended up moving up. So if we were to actually jump towards later in the week, so let's just say we go to Thursday, which is yesterday, which is what this script is populating on our charts, because this is the intraday script for Thursday, as it's just Thursday's information. Every day there's new data, so the script will repopulate itself. But as we come here and we take a look, let's see, this is 245, so we see max pain moved up. The absolute GEX strike is 250, so it's purple and blue. That's what's on our chart. Here is our purple, and here is our blue, so 245, 250, 245, 250. What we also have is, you see this strike price right here, 260, this big green bar, that is the highest positive gamma strike. Generally in a positive gamma environment, so this is letting us know Tesla's net GEX is positive. If it was a negative number, these bars will be red. So Tesla, in a positive gamma environment, the market has momentum. This is letting us know we're probably going to want to head towards that highest positive gamma strike, which is 260. So that's why this is green on our chart. It's letting us know this is our potential targets. This is the strike price that has the highest amount of absolute GEX. So that's the combination of call and put gamma, and then turn into an absolute number. And then we also have max pain. Again, if you've never heard of any of these, don't worry about it. I'm just trying to explain for this video so people know that these levels are color color coordinated for a reason. And then if I were to turn off all the studies, you guys can see it's all coming straight from the script. So you don't have to look at this if you don't like. You can also have the information right on your chart once you get familiar with what these colors mean. Now let's just jump back to this day. We were talking about this day in question right here. Because this is Thinkorswim, I can't jump back to that day on demand and then have the levels show you. So that's why I decided to show it from this example here, because it's the same thing. And this is, again, straight within the platform. We can jump to any day within the past, I think since 2017 or so, and review. But looking at anything, in my opinion, prior to 2020 is almost worthless because the market has changed so much since then. So on a day like this, or early in the week, let's just say you're the type of trader that work a 9 to 5 and you can't pay attention to exactly, you're not at your desk all the time. You're not always managing or able to catch all sorts of types of trades. And you decided on Monday that it's worth it to just get long Tesla, at the close here to swing towards 260. Why 260? Again, if we were to take a look at the absolute GEX early in the week, I'm going to actually open this up in a new tab. That way I'm not clicking back and forth because I want to keep this date open. So let's drag this one over here. And let's, again, jump back to the Monday, let it load up, minimize that. And as we scroll down again, this is now as the market opened on Monday. We have this 260 level early in the week. This is not really going to be the strike price that you'll probably be that interested in. The 250 is the one that seems very obvious. So 260 is a little bit far away. But let's take a look by the end of the day. What did the gamma profile look like? We can see the 250 level was still pretty dominant. And that's something you want to see as the day is progressing. Is that strike price that you're thinking price is going to go towards? Is it still large? Are the positive gammas still increasing towards that level? Let's just jump now to the next day. So this is now Tuesday. And let's see, what did the gamma profile look like as the market opened? 250 is still pretty dominant. There is some volume coming into the 260 strike, but still 260 is not really going to be something that's going to catch your eye. It's going to be all about the 250 level. So you'll probably be you'll most likely be looking at the 250 calls. As we can see on Tuesday, the market opened and then we rallied straight towards 250. So now if it's at 250 and you missed the whole move and you're thinking, hey, where do I think it's going to go? Let's take a look towards the end of the day. This is about 30 minutes before the market closed. We're now above the 250 strike, and we can still see there's a decent amount of volume here, These call gammas are not as impressive as the 250 strike, so maybe you won't take this trade here because now you're thinking you missed the move. 250 was the move. The move was from 240 up to 250. You missed 250, and you're kind of scared because you don't really know if it's going to 260, so you decide to wait another day. So now let's jump to the Wednesday, because that's where my favorite style of trading comes into play, which is the break and retest, because I'm not really that great of a momentum trader, which means this move happened very quickly here on Tuesday. So unless you were prepared at the open, or you're a scalper willing to take the break over key levels like 245 to 250, or you were aware of it, to take the previous day's high break, or you saw some sort of pattern, maybe on a larger time frame, whatever your reasons are, this move happened relatively quick. This was a large move for Tesla for a one-day move. So from here by the close up to here, we're talking about over 7%, and that's a large move. So what do you do now if you still think it's going to go towards 260, but the risk reward isn't that great? If you're buying calls here and we're at 256 and Tesla just rallied this much, and you're only looking for a couple more points or so, 3-4 more points, this isn't really that great of a trade, because then what's your stop loss? To have an adequate stop loss or something like this, you probably need to put your stop loss below this little, potential demand zone down here. But now this is all the way down at 248. If Tesla's all the way up at 256, that's way too much risk just for this little small reward if you're targeting 260. Now we have reasons to strongly believe we're going to 260 because we can see the options activity targeting 260. But what is the setup and what trade do you take? The break and retest is an actual setup. So what we have here is the Quant Trading App weekly levels. Once these levels break, if we get a retest of them within the same day or the next day, they tend to act as a good support. And that's not just these levels, that goes for any support and resistance level that you'll learn. When you first start off trading when you first start off trading and you learn technical analysis, you learn previous resistance becomes future support. So as price rallies into a resistance level, it gets rejected. It gets rejected. Once it breaks that level, if it comes back down to it, it's likely to act as support, and then price will continue trending in that direction. So that's exactly what we have right here. As we can see, price rallied. This is our first real sign of struggle. It gets rejected, but then there's enough momentum to push price right through it. Now, the next day on Wednesday, we get our first retracement. So being aware that if price were to come back to this level, this is likely to be a price in which you can look to get long and targeting this 260 level. We will know 260 because it is a high positive gamma strike. So you already have your target from the gamma profile. You know where to look for your entry. On top of that, the 250 level is right below it. So if we were to take a look at Wednesday in isolation, if we come back to the chart now, let's jump to the Wednesday. We'll load this up. And we can see what did price action actually look like. So here's the chart. Wednesday, buying here at the open doesn't really make much sense because you're kind of buying in no man's land. Price just gapped down. We're right next to a certain resistance level. Price starts selling off, and now we see we have confluence. Here is our weekly level. So it's the break and retest. Here was our break out right here. This is our resistance. It broke out, it retested it, and now we have the 2-day anchored VWAP. So we have a checklist we're building on. It's a break and retest. It's a significant level right here that's potentially going to act as support. We have the 2-day anchored VWAP. We have confluence. We have 250 strike, which is right below it, is the absolute GEX strike. So there's an options level that's likely to act as some sort of support. If we were to take a look at the gamma profile on the 30th, so this is the options GEX for the 30th right here, Wednesday, we take a look 15-30 minutes after the market opens, we can see the 250 level. This is where the spot price was. So this is letting us know price sold off, and now it's selling off to this strike price. This strike price should act as some sort of support. It doesn't mean it always has to. If it were to break below this, then we would look for the break and retest in the opposite direction. So in other words, if price sold off below 250, so let's draw that out here, price sold off below 250, then let's just say it ended up bouncing back and then it rejected 250, we would take it short, probably targeting whatever is the next key gamma strike. But in this case, that did not happen. Price sold off to 250. 250 is here to act as a support level, and now we can see what is our next big positive gamma strike. It's the 260 level. We can see that the options relative to where the spot price is, which is, we'll say 250, we can see the gamma increase. So it goes up, and then it goes up. So it's increasing up towards this direction. That's something we want to see. We want to see participants trading in that direction also. That's the blue in the background. That's the options volume. So it's letting us know there are people that are trading those calls. And at this time here, the opportunity is to trade from 250 up to 260 with a tighter stop loss. Because if price was to break down below 250 and then it was struggling to get back above, you probably have about $1 room. Right down here would be about 149, even 158. Now you're risking about 1 to 2 points to potentially make 10 points. Because if you're buying at 250 and you're targeting 260, that's 10 points. That's a really good risk reward. And it doesn't always end up being, and you don't always end up getting rewarded in the same day. In this case here, price went straight up to 260. If we take a look as the gamma progressed throughout the day, here's it at 250. So let's pay attention as I jump through. We can see price immediately bounced 15-14 minutes later or so. We jumped, and then we can see the positive gamma is increasing. Let's just continue to go. We can see that it ended up struggling. You see 255. If I jump back, price went to 255, it hovered around here for a bit, ended up getting rejected as it's working through this level. As we continue, we can see now that it's above 255, it's holding over 255. Look at how the 260 level is now increasing. There's a lot more call volume going into this strike. The volume is right here, about 80,000 calls being traded at the 260 strike. Price is rallying. It's now midday. This is 12 p.m. noon Eastern time. And as we're rallying, we can see how much positive gamma is still increasing, but now it's at the strike price that we expected it to go towards. So banking on it going much higher is a lower probability trade given where it just came from. Again, the previous day it rallied almost 8%. And now within this days here, from this low to this high, we're already talking about almost a 4% rally. So expecting it to go much higher within the same day is less likely, as it would probably need to pull back, cool off for a little bit, gain the interest of more aggressive buyers, with a better risk reward. And then we can see it end up just stalling out around that level as it ended up getting rejected. And then by the close, I'm just marking the time right here. So as we continue, right here would be the close. We ended up closing close, in between these two positive gamma strikes, which is to be expected, as 255 is now likely to act as support. We take a look at the chart. We can see the 255 strike price is right here. We also have, this is the break. Here's the retest of now this level. So we have confluence now at 255 to show that it's holding right here. And then the next day it ended up going up to 260, but there isn't really much of a clear trade here in my opinion. Yes, yesterday, which was Thursday, it ended up holding the 2-day anchored VWAP. So there was opportunity to scalp here, but the meat of the move, the bigger moves, came in these 2 days in terms of the cleaner setups in my opinion. More importantly, I was just trying to highlight how you can compound multiple information, not only just looking at your chart, but using levels that are generated statistically and then adding the gamma exposure to increase your edge as a trader, I think is valuable. And again, this isn't a trade in which I took, but I think I'm going to start sharing more videos on this YouTube channel, not just on trades that I took, but as there's so many opportunities, the market is always teaching us lessons. And if I try to keep this YouTube channel tailored to just the trades in which I take, it means I'm missing out on a lot of different things that I can actually show you guys on YouTube, as well as introduce you to a different style of trading. This may seem a little confusing or complicated when you're first starting out. Just like anything, I'm pretty sure when you first open up the options chain, it seemed pretty overwhelming, but after a while, you tend to get pretty familiar with what to look for. All we started with was just taking a look at, this is where Tesla is at the start of the week, and we're thinking about getting long, and we see that 230 is a potential good level to get long. We see that 250 is a really good possible target. What do we do if Tesla gets down to 230? What do we do if Tesla just breaks out? Where's our momentum trade? If we miss the first trade, what do we do the next day? If we have a pullback, what signs to look for the pullback? We had multiple confluences to look for the buy at 250, targeting 260. So this ends up becoming an A+ opportunity in my playbook. And then on top of that, if we take a look at the spreads, so let's just say you trade butterfly spreads as opposed to just buying the call option. Let's just say you're looking at the beginning of this week right here. This is the 28th, which I believe is the Monday. Yeah. So the 28th, you can see a long call butterfly just targeting the 260 strike price because it's so deep out the money. It's so cheap early in the week. We're talking about right in the middle of the day here on Monday, or even at Monday's close, we're talking around 60 or 70 cents. And as you guys can see, this is now going for $5. So that's room for an over 5x trade or return. And the risk is really low that sometimes it's worth it just to take the trade. If we were to take a look at a wider butterfly, I haven't traded butterfly on Teslas in a while. I did a video back in before pre-split. I used to run weekly iron butterflies on Tesla as it was part of one of my core tickers in which I traded. But now I'm not as interested in trading Tesla just because it's such a smaller ATR, and I like the SPX, which has a larger ATR. But if we were to come here and we see that for $3, it's now going for 14, and this is a higher probability trade because all we're saying is, hey, as long as Tesla is above the 240 strike or whatever the break evens would have been when this trade was open, it will let you know. And then as long as it's above the break even on this side here, you're in a profitable trade. This is a much wider butterfly, so the probability of success would be much higher, but you're essentially saying, hey, you want the 240 call to be in the money and you want the 280 strike to be out of the money. So you're targeting, as this is on the Monday here, you're saying, hey, I think Tesla is going to be above 240, and then I think it's going to be below all the way somewhere 280 is all the way out, all the way out in the stratosphere, but we can just say around here. So as long as Tesla was within this region for this week, you're going to be profitable. And there was enough reasons to believe with all the gamma all the positive gamma exposure in this area, there was enough of a reasons to think that Tesla would be in that range. And then if we just take a look at what did the long call go for, so at the start of the week, let's just say the long call, and for the weekly expiration, the 250. Let's see here on Monday, which would be the 28th right here. This is the open. We're looking at it about $1, so $1.50 or so. We'll say from $1 to $1.50, and it ended up hitting a high of $10. So there's plenty of room here for a great trade. This is the retest here on Wednesday, so about $6 all the way up to $11. So not as great, obviously, as grabbing it on Monday, but this was the clearest setup. If you're trading the butterfly, you guys can see how it has much smaller, much less risk involved because you're also not worried about time decay. You can also adjust how wide you want to make the butterfly. You can make it as cheap as you'd like it. You can also give it an extra week. So if we were to look at something like this, take a look at earlier this week here. Here's the Tuesday. We're looking at it going for about 360, and now it's going for $9. So a little over $600 in profit per butterfly that you decided to run. And this is a trade, again, that inherently has less theta risk. However, there is risk for assignments when you're trading non-cash settled instruments. So it's just something to be aware of. However, I've never been assigned trading Tesla butterfly options, but it doesn't mean that you won't. Hopefully you guys enjoyed this video. I know it was very Quant Trading App heavy, as I'm showcasing a lot of the tools within Quant Trading App again, but it's largely how I trade these days. And if I'm going to continue putting out a lot of videos on this channel, it's easier for me to just showcase exactly the tools in which I use, even if I am the sole developer behind it. Let me know in the comments, guys, if you enjoyed this. I'll try to make these videos a little bit more concise. Thanks for watching. Happy trading, and I'll catch you in the next one.